Hey, what's up guys? John here. Bank runs have begun in China.
Songzhou Bank run is just the tip of the iceberg. Starting from last week, Songzhou Bank experienced a bank run, with its branches becoming overcrowded. On October 10th, numerous videos circulated online, showing depositors waiting in long lines at various Songzhou Bank branches to withdraw their funds.
They are spreading to Japan and Canada and America, and what we're witnessing, what we're looking at, is this major push on banks, and what I think we're going to see is a wave of defaults on small, regional, and large banks to lengths which we've never seen before, and it's going to happen very, very soon. I'm going to break down and show you exactly what's going on, and I'm going to show you a leaked video from the FDIC talking about this bank run situation that's going to be coming, talking about how bad things really are and what people should not know. I'm going to show you it all so you can make smart, well-informed, forward-thinking decisions based on facts. Please hit the like button. YouTube will share this content to educate the people. And today's video is sponsored by Patriot Gold Group, but more on that in just a little bit. Take a look at this. So this bank run, has begun in China at the Bank of Canzhou on fears that the collapse of Evergrande made them insolvent. Well, Evergrande, $340 billion in liabilities. $340 billion in liabilities, and it's way bigger than just Chinese banks. You have a lot of exposure in America to Evergrande. A lot of financial institutions, a lot of very, very, very large entities are connected. And we could see a situation where there's a contagion just because of Evergrande. But when we look at how big this company is, and it goes a lot bigger than this. But I think this could be the reason in which they say, oh, this is why it started. But it's a lot bigger than this. I think there's a much bigger story to this. So here's what it is. Evergrande still has 1.62 million unfinished apartments. 5 million people are already affected. And another developer, China's Country Garden, warns it could default on its debt. $200 billion in liabilities. All at the same time. And they've already missed a coupon payment on some dollar bonds last month and face the end of the 30-day grace period for making payments this week. But look at this. Their property market has fallen May of 2021 to where we are now, down 82%. And then when you start to look at what they've just done, they've lowered interest rates on $6 trillion worth of mortgages to quote unquote prevent this collapse. There's no stopping what's coming. There's no stopping it. Look at what they're doing here. This is just the last week. The last week, they are pushing forward the CBDC, right? China's regulators support CBDC amid monetary policy, right? The enhanced monetary policy, digital yuan. This is what they're pushing. This is, 7 pages, government-owned newspaper China Daily to launch NFT platform, right? Last 7 pages, all about CBDCs, all about China's CBDCs. But look at what's going on in Canada. Look at what's happening here. The U.S. debt crisis could ignite a long-term rally in gold. Since March of 2020, we've added $8 trillion in debt, and gold is up a whopping 50%. Now with the Fed raising rates, our interest payments alone are over $1 trillion annually. The BRICS nations met last month, and Saudi Arabia and the UAE joined Russia, China, and India. And another credit rating agency, S&P, has downgraded multiple U.S. regional banks on liquidity worries. 51% of Americans cannot pay their credit card bills, which just surpassed $1 trillion for the first time in history. If this is Bidenomics, increased spending and regulation means it's only going to get worse. Buying gold and silver is the most trusted strategy when you do not trust elected officials in office in Washington, D.C. having your best interest at heart. Call the proud Americans at the Patriot Gold Group today before it's too late. Mention @This is John Williams and you'll always get the best in-class service by Patriots for Patriots. Patriot Gold Group has a no-fee-for-life IRA, where your IRA or 401k can be in physical gold and silver. And you may be eligible for a no-fee-for-life IRA on qualifying rollovers. Call 888-341-2896 for a free investor's guide today. Patriot Gold Group is a Consumer Affairs top-rated IRA gold dealer 7 years in a row. Call 888-341-2896. 1 in 5 property owners, 1 in 5 borrowers has to renew their mortgage in the next year. 1 in 5. So look at this homeowner said on X, social media, Twitter, platform that his previous rate was 2.6% and now jumping to 6%. I don't know how people can afford to live in G7 countries. The CEO of Woolworths Leads estimates that at least 75,000 consumers received these letters every month and revised higher interest rates as the renewal approaches. He suggests in the spike of bond yields over the past month and could, on average, cost, this is average $600 a month. $600 per month. Who can afford this? 2 out of 3 Americans, they don't have $400 in the bank. How are they going to have $600 a month to pay every single month? They're not. We're going to see a big crisis in the Canadian real estate market. And as that's happening, interestingly enough, past month, central bank digital currency, they're saying that this can overcome inclusion. It can overcome inclusion. The big question is, what are the odds? What are the odds, right? The property market is going to be stepping into a world of trouble worldwide, right? Of worldwide proportions. And when you look at a location like Japan, right? This October 9th, so not even a week ago, they had a major failure at the Japan banking clearing system, disrupts 1.4 million transfers. Not $1.4 million transfer, no, 1.4 million separate transfers. It all got disrupted. They said that of this 1.4 million transfers, there's 11 banks, and including locations like JP Morgan Chase. So you're looking at this problem, and then look, they're pushing the same thing. They're digital currency for clean energy transactions. Japan banks to launch digital currency backed by bank deposits. 1 day ago, 3 days ago. Just do the math on this. But look at what's happening in America. Look at what's happening on our soil right now. Banks are sitting on $2.2 trillion in losses. $2.2 trillion in losses. $1.5 trillion in commercial real estate needs to get refinanced just next year. $1.5 trillion. And by 2027, $2.7 trillion. That's 10% of the entire commercial real estate market in America has to get refinanced. So every single commercial real estate building in America has to go through underwriting at a bank to get a new loan, most of which won't qualify due to what's happening right now in the economy. Increased insurance, increased taxes, falling rents on offices. I mean, and this, when they say commercial real estate, it's not just office buildings. This is multifamily, this is industrial, this is anything that is considered commercial, right? So you start to look at how big this problem is that we're walking into. It's huge, but they know this. And this is the perfect scapegoat for it. So if you look at what the IMF just came out with, again, timelines are important. October 10th, IMF says weak tail of banks could struggle in an economic downturn. How many banks? Is this just Silicon Valley Bank and First Republic and Bank of California acquiring PacWest and the small little regionals that really don't impact most people? No. This is what they're saying. Around 5% of banks globally are vulnerable to stress if central bank interest rates remain higher for longer. Now look at this. If they remain higher for longer, now let's see what Jerome Powell is saying. September 20th, so 2 weeks ago, borrowing costs must remain higher for longer. So what happens if they remain higher for longer? A further 30% of banks, including some of the world's largest, would be vulnerable. So 30% of banks would be vulnerable, is what they're saying, if a global economy enters a period of low growth and high inflation. Well, if you see what's happening right now with energy prices, you see what's going on overseas with Israel and Hamas and all these different problems that we're walking into, high energy prices, that's in the cards for us. We're walking into higher energy prices, higher inflation. We're walking into higher losses, higher defaults. That's guaranteed. That's already baked in. And so they're saying 30% of banks could be in trouble because of this. But then when we look at this video from the IMF, which I'm going to get into in a second, it all makes perfect sense. So the warning was based on a new, tougher global stress test that the IMF applied to around 900 lenders in 29 countries following the collapse earlier this year of California-based Silicon Valley Bank, Swiss Bank, Credit Suisse Group, and 2 other U.S. lenders. There's a weak tail of banks in many countries. Director of IMF's Monetary and Capital Market Department said in an interview conducted last week prior to the attacks and to the airstrip, the IMF adjusted this year's stress test to probe the impact of the baseline economic scenario for higher interest rates for longer, as well as the possibility of consumers yanking deposits. It's severe but plausible scenario. Well, you think about it. Consumers yanking deposits, we're walking in to the winter months. In America, for example, student loans were due for 43.5 million borrowers October 1st. You have people traveling, people spending more money. You have $1.1 trillion in credit card debt, high interest rates. People are going to they're going to continue to deplete their savings, their deposits, meaning the losses at these banks are going to continue to get much, much, much worse. And then when you look at what this FDIC video said, it makes perfect sense. Look at this.
It's really important. I mean, it's a little bit conflicted, right? I mean, it's important that people understand they can be bailed in, but you don't want a huge run on the institution. But they're going to be.
People need to know, but I don't think you have much hope of reaching a public that doesn't have a professional need to know.
I completely agree with that. I almost think you'd scare the public if you put this out. Like, why are they telling me this? Should I be concerned about my bank? Like, my insurance company doesn't tell me what they're doing with my assets if they just assume they're going to pay my claim. Right? I think you've got to think of the unintended consequences of taking a public that has more full faith and confidence in the banking system than maybe people in this room do. So there's a select crowd of people that are in the institutional side. And if they want to understand this, they're going to find a way to understand this. There's a bunch of law firms represented in this room. There's a bunch of people that charge them by the hour a lot of money to explain this all to them. And it's fine. I don't have a problem with that. And they all have huge staffs. But I would be careful about the unintended consequences of starting to blast too much of this out in the general public.
So you see what they're saying, you see what's happening, but here's a scenario in which I think is very probable. I believe we could see a wave of bank failures in America, and then what ultimately will happen is that consumers will be scrambling for a solution. What can we do? What can we do? And then they're going to say, look, you can have an account at the Fed. You don't have to worry about bank failures. You don't have to worry about any of these problems. Everything will be held at the Fed. And people will say, hey, peace of mind, security, money will be held at the Fed. And then before you know it, that money held by the Fed could be then issued through a central bank digital currency. And at that point, the plumbing's already in with Fed Now. That was pushed in 2 months ago. So everything's already in the works. I don't know if it's all going to happen overnight. I don't know. But what I do know is that when you connect all the dots, problems are ahead. And the big question is time. How long? Is it going to be in a month? Is it going to be in 6 months, a year, 2 or 3 years? I mean, if we look at what's happened just over the last, call it 4 years, it's been a death of 1,000 cuts. Coming up in March, which is about 6 months from now, that'll be the 4-year anniversary since all of this began. So this could be something that happens a little bit, maybe a little bit out in the future, maybe 6 months or a year or so. But I ultimately think that this is what's going to happen. This is what makes the most sense when you look at all the facts of what's actually going on. But I'm curious, what do you think? Drop below, let's have a conversation about it. And for more information on Patriot Gold Group, you can find everything inside of the description below this video. And I'll catch you guys in the next one.